Hi everyone, so welcome to Investing for Value. I noticed Revolve Group has been getting some interest lately. So I looked on my YouTube channel and I've made quite a lot of videos since my last video about Revolve Group, which was quite a few weeks ago. And what's changed? Well, when I made that video, the stock was about $20 per share. Right now it's $17 per share. It's come down a fair bit since then. Not quite at its lows. The lows was $14.35. So it, by that kind of view, that things could still come down a little bit lower. If you were to buy at this price, it wouldn't be too bad. Like if it's a stock if it's like a company you understand, a company you like, then by all means, if you want to get in, like it's not a bad price to get in. Though I don't know if we've confirmed the downtrend for this stock, particularly the market volatility of late. Like the coronavirus didn't help, but now that we're finding coronavirus is getting a cure, and then Trump being impeached, but now we're finding out that he's not going to be impeached. So all of a sudden, all the uncertainties in the markets are kind of being tidied up, and things starting to look a bit brighter again. Though you can never be certain that something won't happen again that causes a bit more volatility. So at this price, it's not too bad. At this pricing, I'm probably still not buying yet because it's not enough for me on terms of an upside. Like if it reaches like $16 for me, it starts to look a bit more interesting. But if you're an investor, but I can't tell with the low. Okay, like I'm just telling you a price that would interest me. But by all means, if you're interested at $17, it's not a bad pricing either. Like you could buy, like this is a strategy that I would definitely recommend if you're buying at this pricing. Like buy 25% here, save some money, buy a bit 25% here, buy 25% here. And because 14 is the lowest, you can guarantee there's a good amount of support. So I would save a bit more to buy it at $14 mark. Um, yeah, I may never hit there, but at least you've got the money for it. The typical person likes to just put all their money at once, but I don't necessarily advise that, because it's just so much more riskier. Like if you notice that you're that person without that patience, and you just really want to put all your money in there, perhaps you could just put 50% at 17, and if it ever comes down to 15, then you do the other 50%. Or if you think you really can't, then maybe see if it comes lower to 16, then you can do 75%, and when it comes out to 25 to $15 mark, do the rest of the 25. It just matters. You just leave a bit more money on the side because given how volatile markets are, that you can actually average down, which is one of the most important things you can do when you buy at certain pricings. But like by all means, if you go all in at here, in the long term, I don't think you'll do too badly because this is still a good stock. The price has only fallen because of all the turmoil unrelated to this stock. So like it's just like these wider market problems that have caused fear in the market. People have sold down, and at 17, I think it can go back over $20 this year. I can't confirm when this year, but I can definitely say this year it would happen. It could be the next quarterly that comes out, which is 25th of February. So 25th of February, I'm gonna assume that they've got some pretty good results. It was the last quarter, which includes Christmas, and Christmas sales tend to be very good. So you would say like if this stock fell when a quarter comes out, I would say the price has a good chance of just coming back up, assuming they do really well. And based on the trend, they seem to be doing pretty well. They still have to match their recent growth, which is around about 20%. If they can match the growth, keep going around 20%, I can see people wanting to buy up this stock and it hitting above that $20 mark. So at 17, it's not a bad stock to buy in. like you would be looking at about a 20% upside, which isn't bad. So I would say, like, if you want to buy in, you can by all means buy in at this price. Just keep a little bit of extra on the side. You decide how much you want to keep on the side, and do around there. That's just my opinion. You might have a different opinion. Use what works for you. But for me, what's always worked is being able to average down. So always leave a bit of money somewhere to just be able to like buy in if the price ever comes a bit lower. I like the company. The company's pretty good. It seems to be keeping up with fashion trends. It's expanding internationally, and it always looks at improving its service. So right now, like they've just recently expanded to, they've recently improved their service to Singapore and New Zealand, where they're offering 2 to 3 day shipping. So doing 2 to 3 day shipping for international markets, that's actually quite impressive and very, like it starts to interest the overseas market. And if you can do that with a lot of countries, so it kind of, it means you've got a lot of growth coming your way. So they're not limited to the US, and these guys, they can just keep growing as they go. So, and they've got a really good model because they operate online rather than having to have a store. Means their cost generally stays fairly low, apart from the shipping costs. If they can keep that on the low side, because if you spend over $100 US, you get free shipping. So you hope shipping is free, especially well you hope shipping is low in costs because to do 2 3 day shipping isn't cheap. So I think like it's not a bad company. Pricing's not bad. It's worth buying into. The share price has merely been affected because of the wider market sell down. So there's really been nothing wrong with this company. It's got a quarterly coming out at the end of this month, so I can't see why you wouldn't want to buy into this company, I guess. Apart from if you didn't think the upside was that much, like for me, it kind of feels that way. Like I've just recently been investing in Tesla. I've been recently investing in Beyond Meats. Um, I've actually had many stocks just in the last month that have increased just 30%. So like 30% plus, some 40, some 50. So for me, I tend to look for a bit of a higher upside. Like 20% for me is like it's like this higher. It's like the maximum I think you will get within the next 2 to 3 months. But that's just how I'm seeing it right now. It could be potentially higher. So that's why I'm waiting for like $16 or $15. So then there's a bit more for me to gain if I did want to buy into this stock. But if this is a company you understand, like it's a pretty like reasonable company. Like it's pretty stable, it's pretty consistent. It knows what it does and it does it quite well. So like if you're interested in this company, and you're thinking, is this a good price to buy in? I'd say it's not a bad price. Definitely not a bad price. Particularly how much it's fallen on just wider market sell downs, and the company has not changed. That's one thing we look for in these stocks. If a price falls but the story hasn't changed, it means there's value to be gained. And at this pricing, it's pretty fair. Like it's pretty fair. Like that's why I say it's not bad buying in at this price because it's a pretty fair price. And if you understand it, then I think it's like you definitely, and like you might understand the company a lot more than me, because a lot other people or you or whoever, like they probably understand fashion a bit more than me, and you'll probably appreciate the company if you're a customer, and in that kind of just like it's always best buying into companies that you understand really well. So should you buy into it? I think, like if you don't have a better alternative, then I'd say go for it. Like I generally have a lot of alternatives because I'm always buying into these high growth companies. Um, but like I'd certainly consider it at the $16 mark, because especially with the anticipation of the financials coming at the end of the month, that means there's a possible upside if the financials are good. If the financials aren't great, it's actually good to buy in at the low side, because it means the drop won't be that big, and that's generally like very important, because you want to buy into something where your upside's big if good things happen, but if bad things happen, your downside's not that down, if you know what I mean. So that's kind of the approach you want to take. You just want to just like be able to ladder yourself and go like, if at this price 25%, this price 25%, that price 25%, and it's a good way to go. But I guess you can be the judge for yourself. But at this price, it's much better than $20 quite a few weeks ago. So now I can say, if you at this price, it's not bad buying. If you've got any questions, let me know below. If you've got any other stocks, also let me know, or any other questions you have. And your attention is very appreciated. Like, I enjoy making these videos if you find them useful. If you don't find them useful, then for me it's just about reflection, I guess, about me being able to just practice talking about stocks. But I hope it has good, useful information for you in terms of helping you make a decision whether you should buy or not buy this stuff, or how you should approach your buying. Until then, well, good luck investing, and I hope the markets continue to do really well, because things have just like calmed down. Markets have been a lot stronger than I thought it would. I thought it might be a bit choppy, but so far it's actually shown itself to be it's still quite bullish. But of course, things can always change, so always have the right approach so that you protect yourself from the downside. Until then, I'll see you next time.